Hey guys, welcome back to another video, getting ready for the week ahead. Today we're going to be taking a look at everything from indices, commodities, and currencies as we do each and every week on these Sunday videos. Now I'm actually recording this Friday afternoon because I'm going to be out of town, but I wanted to go ahead and make sure I get this video out for you. I am recording this right around when the market is about to close here, so I wanted to just kind of give you a little bit of an overview of what we're seeing here for the week ahead. Now, we're going to talk indices, like I mentioned. We're also going to talk about gold and yields, which have come down, and also what to expect for this upcoming really big week. As this week we have the NFP numbers. We also, so jobs data is coming out. We also have the Fed meeting in July, or the end of July here, July 31st, which will be very, very big to see what kind of clues we can get as to whether or not the Fed is going to cut rates. So should be a really big action-packed week, and let's go ahead and jump into it. Okay, so first of all, I wanted to talk a little bit about where the indices are leaving off for the previous week. So if we take a look at this, I just want to apply some simple moving averages to the chart here for a second and talk a little bit about where we're at with the S&P 500. So this past week, we've seen price come down to the 20 and the 50 period moving average and found a little bit of support here around the 50. We also have some support looking left on this chart, and things could actually even look a little bit better on the Nasdaq, in my personal opinion. We came all the way down here to this purple line, which is the 100-day moving average. And just notice how we just barely tapped into that and did find some buying coming back into the picture. Now, we're not out of the woods yet because, again, what we see here is that overall with the Nasdaq and the S&P 500, they've had some pretty heavy selling in the recent 2 weeks or so. This is a daily chart after all, and I am just about break even on my Nasdaq position, but we've also seen some really good push today, last week or so here on the Dow Jones, which bottomed out, it seems, right around 40,000, at least for now. Now, is it all clear here from here? Or are we just going to see markets rip higher? I mean, maybe, but we're definitely not in the full clear. We did hit some levels of past resistance that I believed had a good chance of holding, and we were right about that so far. But I want to talk a little bit about the indices, then we'll get into gold and the dollar, etc. So, are the indices moving higher from here? Well, I'll give you my perspective on why I think they could. First of all, the technicals look decently good to me. Again, we're pulling back. We're finally seeing a healthy pullback after all this push up. And a lot of people are saying, hey, they've completely broken, they've completely crashed. But remember, and I talk about this frequently, 5 to 10% pullbacks in the indices are not only healthy, but okay, but they're actually healthy for the overall market. You can still have a bull market and see just fine pullbacks, 4, 5, 6, and up to 10% pullbacks. Once you get beyond 10% pullbacks, now you're talking about, bears are pretty strong and could be a little bit cautious, but we're still very well in the realm of healthy pullbacks on the daily chart, which is why I've been trying to catch buys on the way down. Now, the Dow Jones has worked out really nicely for me. I'm up on this position, and we'll see where this one goes. Now, the other thing I wanted to mention is that if we take a look at the Edge Finder, we take out minor currency pairs, you'll notice that we're still getting a lot of bullish readings for things like the Dow, the Russell, the Nasdaq, and the S&P 500. So we're getting some bullish readings on U.S. indices, and this is giving me some extra confidence. But what are these bullish readings coming from? And the idea here is that basically the overall economic data, the economy seems to be hanging in there when we look across the board, when we look at things like GDP statistics, which came out pretty strong this past week. And, retail sales is not amazing, but it's hanging in there. We're not seeing huge decline. If you take a look at inflation has been promising, right? Rate cuts seem like they're on the way pretty soon, whether it be September or it's likely to be September as our first rate cut, but it could theoretically be, a 50 basis point rate cut in September. It's unlikely, but it's very possible, especially as the economy is seeing inflation coming down and the employment data is hanging in there, but it is cooling. We'll talk about that in just a second. But I overall like the story for rate cuts in the second half of this year. And that story, as long as we see growth relatively strong overall, and which has been the case, we've seen healthy jobs data, not terrible, not incredible, but that has been the necessary thing to see in order to get inflation cooling. In fact, while we're on the topic of inflation, let me just pull this up. So you can see inflation has come down a long ways. It went sideways for a while, and recently we've actually started to see progress on the CPI year-over-year report. This is a positive thing for seeing interest rate cuts. Let's push on and we'll take a look at the unemployment rate. This is, may not look very pretty at the start. You can see unemployment rate is rising, but once we add a little bit more context here, I'll show you this. If we just expand out by a few years here, what you'll see is that unemployment rate is trending up, but it's coming off of very, very long-term lows. And so we're not in a threatening spot with the jobs data overall. We see, again, overall, the economy still hanging in there, right? Bad jobs data is bad economy, but good jobs data, which is where we're still pretty much at, is okay for the economy, showing some cooling but not crashing. So my overall view for the indices remains bullish, and I will be buying dips and setting stop losses in case I'm wrong. Now with the Nasdaq, if we break through these lows, that's going to be my trigger to go ahead and stop out of these positions. Same thing with the Dow Jones. If we were to break back underneath, I would go ahead and call it quits on this position. But why the Nasdaq and why the Dow? Well, the Nasdaq, I like the big tech. I do like those companies, the powerhouse players of the US stock market. These are your Apples, Microsofts, Nvidias, Amazons, etc. I like those companies a lot, and I want to have them in my account, especially with the recent pullback. We've seen from peak to trough almost a 10% pullback on the Nasdaq, 9.8%. I'll take that pullback, especially when I still think there is upside for the stock market for the rest of this year. I'm going to take that pullback any chance I can. So if we keep going on, I also want to talk a little bit about where the dollar is at. So if we see rate cuts in September, which has been the new kind of theme, this highly expected rate cut in September is part of the reason why the dollar has been pretty weak overall, right? I think that remains supported. So I see limited upside for the dollar at this time. In fact, any rips on the dollar, I personally would take as more opportunities to be setting up for bearish, moves lower, as I do think rate cuts are coming this year, and there is the possibility that the slow down the jobs data could accelerate. And if that happens, you probably see more than one rate cut this year. So we'll see how that plays out, but I lean more bearish on the dollar, which could give way to higher prices on the Nasdaq, the Dow Jones, and the S&P 500 as a whole. That also, keeps me relatively bullish on gold, but I don't really like the price action. We saw this big breakout, and many of you may have seen me talk about my gold trades, which went really well during this time, and then we trailed out when price started to reverse. The next portion here is that we've come back into consolidation, and so I'm really just sidelined on gold. I'd like to see gold start to really trend up again, and then I may look to start, looking for further buys. But as it stands, I'm just going to stay on the sidelines because we've come back into this daily chart level of level of consolidation, which is just not as attractive for me on gold. So I'm going to just wait it out on gold. And in the meantime, like I said, I have several trades setting up on the indices, which I really, really like. So gold you'll also see on the top setups page, is not currently there. It's getting a neutral reading. So I'm sidelined for now on gold. Speaking of the Edge Finder, by the way, if you guys are looking to get access to the Edge Finder, you can currently get 50% off. So for those of you guys who regularly watch my videos, you may want to take advantage of this discount. Our summer discount is going on currently for the Edge Finder. You can get half off, and all the information for that can be found down below in the description. And the promo code is YTVIP. So check that out. Make sure to use that, and you can get yourself a copy for a nice discount before that ends. I do also want to mention that is the biggest discount that we're doing this year. So if you're like, I get it, discount, this is literally the best opportunity to get the Edge Finder at the lowest cost. So don't miss out. And I also wanted to mention Bitcoin. So Bitcoin actually getting a bullish reading on the Edge Finder, very interesting. It's taken off. I've kind of missed this one personally for my own strategy, but I'd like to either see a breakout and retest on Bitcoin, or maybe we pull back into the 64,000 level where I could maybe look for longs. What you'll probably note about my general thesis about the markets is I am more on the risk on side. I still think that the AI trade has room. I think that the consumer is feeling the pinch right now, but that rate cuts could offset that, and that we could theoretically see this soft landing start to play out in the US stock market. Especially with elections around the corner, both, presidential candidates, Kamala Harris and Donald Trump, if they go head to head, both of them are probably going to have plenty of fiscal spending, which could continue to support the economy, right? Spending in the economy generally causes growth. And with odds slightly favoring Donald Trump, if Donald Trump becomes a president, there is probably going to be no shortage of spending, but also tax breaks for businesses could cause another surge in economic activity as well. So we'll see. I don't speculate whether or not that will be good for the economy in the long term or not on this channel, but from a pure perspective of what our market's going to do, if you remember in 2016 when Donald Trump took presidency, the stock market did roar higher on his kind of surprise election. He wasn't expected to win, and when he did, the market took off running just because of the, generally speaking, the Republican side of things is more pro-business and can be, tax cuts, things like that, which can boost stock prices. Anyways, we'll keep going here and talk a little bit about other charts that I'm watching. So I'm also long TLT, which is bonds. So I'm long bonds, which we've seen increased chances for rate cuts recently, and that has been very good for my bonds position because yields falling means bond prices rise. So you'll see that these are generally inversely correlated. So we're going to continue to watch that. Also on the currency front, we've got a couple ones to talk about briefly. We've got dollar CAD, we've got pound USD, and we've got maybe NZD USD as well. So these are some of our more strong readings on the currency side of things on the Edge Finder. So let's go through them really quick. So USD CAD, I actually was watching this earlier, looking for a breakout and retest of this past resistance. This could be an interesting setup going into next week or the next week. So as this breaks out, if we do get some sort of pullback, maybe if I'm wanting to add a little bit of dollar bullishness to my account, I could do that. But I mentioned earlier, I lean more on the bearish side of the dollar. So maybe I'd look at the pound USD setup even more so, which is coming down into this previous level. I'll be watching this one close for a possible setup. And if I take this trade, it will be shared inside of our Discord channel, which is, by the way, linked down below in the description if you'd like to join us. You can also find us on Telegram. Those are free channels to join. And again, all of the information is in the description of this video down below. So I like this setup a lot. I think that's probably a 38.2% retracement. Yeah, almost a 50% retracement. So as this level comes into play, this is one that looks good. If we apply some moving averages too, you can see that we're testing the 20-period moving average. So I do kind of like the pound dollar on the daily chart there. And we'll have to watch that one to see where that goes. So you got pound USD, dollar CAD. On the flip side, we've got dollar yen and Kiwi dollar. So let's take a look at dollar yen. This thing absolutely fell apart here recently, and now breaking through this level of support, it's possible that you do continue to see some resistance hold around this 154, 155 zone of what was support now could turn resistance. We've really changed the direction on the dollar yen. This thing was trending so well, and I would say though, be cautious getting too bearish here. I'm not probably going to take a position on this myself because look at the way this price came down into this area. In fact, we should probably add this into this zone here. So let's just adjust that. You can see both times that we came down into this area, huge buying support came into the picture. So I'm a little bit neutral on price action wise, big sell off, lots of momentum lower. But again, buyers seem very strong in this 152 area, as we've seen historically speaking, this be a key level for charts. Take a look at the chart, NZD USD, the last one on the currency side. If you get some sort of break of this longer term low, this could be interesting. Kiwi dollar looks really weak, and if you are bullish on the dollar, this may be one to watch. So a little bit of something there for each, both the dollar bulls and the dollar bears. Like I said, I generally lean on the bearish side, and with the VIX actually falling, this is also another positive thing for stocks. If we can see the VIX continue to roll over, we did get a big pop, and generally speaking, we do tend to see these things fade, at least in the recent, bull market years. When these things pop up, they generally are more of a opportunity to get short on volatility, and a great way of doing that in my approach is generally speaking getting long indices if I can find a good setup. I want to talk just momentarily about the Dow's outperformance, and I also wanted to call attention, just shouting out the Edge Finder for a second. This actually has been the favorite of the Edge Finder, has actually been the Dow Jones, which is part of the reason why I went long. Why is it getting a very bullish reading? Well, again, you can see inflation statistics overall favoring it, employment data, but also the commitment of traders data, which shows us what the latest filing from institutional money is. And we're not going to go through that today here on this video, but remember, if you're an Edge Finder user, you can always pull that up under the sentiment tab. Just click COT data and you can take a look at that on your own time. So if you don't already have a copy, again, take advantage of the half off discount that's going on right now. Using the links down below in the description, you can find information for it. So don't miss out on that. And there you go. So that's going to do it for most of what we've got here. The last thing I will say about this week, I was starting this point, let me finish it with the Dow Jones, is also that value seems to be doing pretty well today on this Friday when I'm recording this video. Big reason here, I think, that value is strong is because rate cuts are expected, and a lot of the rate sensitive stuff like industrials, and if we take a look at some sectors for a moment, we can actually filter by strongest to weakest. We can see industrials, which again, the Dow Jones comprises a lot of industrials. We also see real estate doing well, comm services doing well today, basic materials. These are a lot of rate sensitive stuff. Regional banks, I mean, these are very interest rate sensitive components of the economy, rallying hard today, thinking that rate cuts are coming. And value, again, is a big kind of theme of the Dow Jones. It's a lot of blue chip companies. It's part of the reason why I went long on it. Again, big level of support and Edge Finder confirmation. And this trade has been a killer so far. We'll see if we can see more upside in the Dow Jones. Last thing I will say as we close out this video, I just want to mention that if you're looking to get access to better brokers, you can use the one that I use, which is Webull for stock and ETF trading. And if you're looking to trade FX or you're looking to trade CFDs, and wherever you are in the world, there's several brokers linked down below in the description. These are all brokers that I really like, I think, and they're all very well regulated as well. So if you're looking for a better brokerage, and more specifically, if you'd like to trade directly on TradingView, it's super convenient. All of the brokers in the description down below will allow you to do that. And they are affiliate links, so you'll be supporting my channel. I really appreciate you choosing to use those links. If you would like to, you don't have to, but it does support my channel. Thank you very much for watching. Have a great week ahead.